So welcome to the Real Estate Brief. My name is Adam, and today we're cutting through a lot of the noise. We're going to get to the truth in the news, look at the data, and I'll give you some of my observations and where I believe you can find opportunity. So if you're ready to gain your real estate edge, let's dive into our first story. So now this is my first featured story that I'm going to talk about. And this is, I've kind of titled this The Invisible Referral Pipeline. And it comes out of an article that was written by Inman News. And you guys know, if you're fans of this show and you come back and you watch regularly, you know I reference Inman a lot. I do prefer the way they write. I like their transparency. It is a pay service. If you're wanting to kind of find good news, I encourage you to look into their platform. I am not an affiliate of them. I gain nothing out of this. I like their system. I encourage you to look at maybe investing in that account, that membership. It has some value to it. All right. So this article here is Referrals You Never See Coming, the lesson every agent needs. And this goes back to kind of what I was talking about, my entire desire for this show. And my desire for this show is, in this channel, is to take a lot of what is happening in our industry and this me-centric idea where I'm going to go out and just promote myself and look how good I am and look how great I'm doing and these type of things, to more of a relationship type business. And my whole focus is shifting from those me metrics, those vanity metrics, into a referral type, relational type business. So when this article obviously was written, I believe it was yesterday, I was like, yep, I'm going to start my show off tomorrow with this article. I think it has a lot of value in it. And so I want to share it with you guys and talk about this. So this is Referrals You Never See Coming, the lesson every agent needs to know. One of the things to just kind of start this off with, we often, focus on the clients we are currently closing with. But what I will say is this article highlights a lot of the massive revenue stream that most agents do ignore. And it is kind of that hidden referrals that come from being a consistent resource, not just a salesperson to a lot of people. So I want you to begin to think, as we go through this article, think that what you're doing with your current client should be way beyond just that specific client and getting to closing. It should be the hidden referrals that lie inside of that relationship, and that you want to become that consistent resource for other people to come to get information about the real estate industry. So as we go through this, I want that to be the thought that you have. There is always this lot of hype around like lead generating and different techniques and different closing scripts and all these type of things. And there's skills inside of that we've got to develop. There's things inside of there that we've got to, as real estate agents and ultimately as salespeople, we got to hone that craft. But really, the focus behind all that we do should be first and foremost the person on the other side, and then also understanding that they know other people, and we want that person to understand that we value people, not just the close. And this, to be honest, any kind of shifting in a market that might happen in real estate, you're going to find a benefit when a recession or a shift happens, when you actually have built relationships with the past clients that you've had that want to refer you business. That will give a recession-proof strategy to your business. So let's go ahead and just kind of read through this here. So as I read this, again, think through this. Like, how can you implement what we're talking about today into your business long-term about building relationships? It says, you're never speaking to just one person. You're speaking to their entire unseen network, Jeff Sybil writes. Real estate rewards long-term relationships more than short-term commissions. How many of you guys would agree with that? Let me know in the comments. Was that true? I think this is going to be a resonating yes, right? I would absolutely agree with this. I've been doing this for a long time. And, when I was actively selling real estate, my referral business was the main game. But by the time I got, a few years in, I began to get more business referred back. And that was the lifeblood. I didn't have to do all this crazy lead gen as much anymore. People got to know who I was. It says, early in my career as a financial advisor in Longmont, Colorado, I learned one of the most important lessons of my professional life. And it came from a client most people would have ignored. Now, I briefly read this. I didn't go through the whole article. Sorry, but I did read this initial point. And this is something I want you to pay attention to, because we can fall into this trap. And matter of fact, I've got a couple stories where people have fallen into this trap in the real estate industry. All right, so here it is. He was an older gentleman who came in every couple of months to invest small amounts of money, usually $1,000 at a time, and always into a safe government bond mutual fund. If investments had personalities, these were the ones wearing orthopedic shoes. But I liked him. He was kind, steady, and appreciative. Our conversations were easy. Now, this guy's boss didn't see the charm. He'd politely remind me, you should really focus on bigger clients. In other words, this guy isn't worth your time. You guys following so far? Have you guys come into this? Have you interacted with people like this, right? But I've never believed in treating people based on the size of their wallet. If someone trusted me enough to walk in the door, they deserved my full attention, so I kept meeting with him. All right, so pause for just a second and think about the real estate industry. If we take this and we correlate this into what it is to be a real estate agent, and if you've been doing this a long time, you kind of know where I might be going with this, is let's say you get a call and you've got 5 or 6 other people you're working with, and they're all buying and selling very large, big homes or big properties, right? And you get a call for somebody wanting to see a very cheap lot, right? You then weigh your options and you say, well, I'm super busy here, and this is where I focus. This is my niche and these type of things. And then you negate the person that's just trying to buy the lot or a different type of demographic. Don't fall into that trap. So, but these are the things that we do unconsciously, that we prioritize our time based on the dollar that we're going to earn. Now, to really begin to shift our mind into a more of a referral type business, we can't do that. We need to look at every single client as exponential amount of potential, right? That one person knows many others. And that's where this story is going to go. And it says this, but I've never believed, okay. Then one day, after another routine visit, he stopped at the door and said, you've really taken care of me. My son wants to invest some money. I'd like you to call him. I assumed his son would be just like him. Modest investments, easy conversations. I called. We set a meeting and he gave me the address of his office. What I pulled up to wasn't a modest office. It was an oil company headquarters. When I walked inside, I remember thinking, I wonder what he does for this oil company. The receptionist said, he'll be right out. And that's when it clicked. He wasn't an employee. He was the owner. This was not another $1,000 investment. This was the meeting that made my entire year. And it all happened because I treated someone well whom my boss thought wasn't worth it. That's when I learned the real difference between transactional thinking and relationship thinking. This is a significant point that this guy is making. So, and I've got a very real situation inside of my brokerage here that this happened as well. We had a client that called, was complaining that they had called multiple real estate offices, and the person on the other side did not want to help them. They were calling about a specific property that had a mobile home on it, just a little teeny lot, was being sold for under $100,000. It was run down. It was going to be very complicated because there's a title issue going on with the trailer and those type of things. So it wasn't just definitely wasn't a cash deal. They were trying to get financing or trying to borrow money. There's all kinds of complications that send off red flags to a lot of agents to say, not worth the time. All right. So, but they end up calling one of our agents, and they called one of our really good agents that understands the value of a referral and the value of a person. So fortunately for this buyer, they called that agent. That agent takes the time, cancels a couple meetings to go out and just meet this person for the first time. They go out, they look at the property. She handles this client as she would if it was $1 million buyer. She takes them around, shows them the property, asks a bunch of questions, begin to dig in deep and find out information about this property, does what a professional agent should do with all clients. Then they end up negotiating, the buyer ends up buying it, then everything's great, right? Months go by. Our agent obviously is not thinking about anything at all. She has a very specific follow-up plan after closing that she follows along with and mails out things and keeps in touch with and those type of things, and that helps. Well, lo and behold, she gets a call, and this other caller says, hey, you helped my XYZ, I can't remember exactly what their role was, maybe their mom or cousin or something like that, buy a property there in that city. We are actually selling out and we are relocating, and we would like to then buy a property in that area as well. Well, that agent, again, not caring about anything at all, didn't even ask much questions, just kind of figure out when they were coming into town, decided to do a buyer consultation meeting, sit down, had that conversation. Throughout the conversation, they find out the value of the home that they're looking for. And they just a long story short, they ended up buying an over $1 million piece of property, right? What a lesson that is. That trailer, that buyer was a person that needed that home. She helped that person. That person was so appreciative and saw value in what that agent did for her, she then referred another client to her that was over $1 million sale, right? We can't count any of this out. That we cannot count this stuff out. We got to always be we always got to be reminding ourselves that these are people we're dealing with. These are people. They have lives. It doesn't matter the size of the home, the lot, the property. It doesn't matter. It doesn't matter at all. What this means for real estate agents and referral marketing. Real estate agents face this same crossroads every day. It shows up when a renter asks for advice, when a modest listing with tons of problems lands on your desk, when someone isn't ready yet, when a buyer doesn't look like they can move the needle. But here's the thing, you never know who people know. Okay, we got to get this in our mind, guys. Get this in your mind. The renter might have a boss who's looking for an agent. The downsizer might have a wealthy sibling. The starter home buyer may one day become your biggest lifelong client. And the person asking a few questions today may send you your biggest closing. Keep all of that in mind, right? So what do we need to do here? Answering the questions no one else takes seriously, respecting clients regardless of their budget, providing guidance without expecting anything in return, being the calm, steady professional they can rely on. That is what I call relationship farming. Relationship farming. Don't think of people as contacts in a database. They are relationships in a relationship farm. Think about how you can stand out and differentiate yourself as a real estate professional. Each individual is a potential referral farm who can connect you to their family, neighbors, coworkers, and friends. So this is very easy advice. You would read this and be like, yeah, of course, right? But look, we fall into this trap every single day. We have this constant tension between our busyness, our time, and where we focus, and there is an element to that. But when you're engaging with somebody, you need to get out of your mind anything about what the value of the home is, how much money you're going to make. It doesn't matter. It doesn't matter. Do not run numbers. When someone says, I'm looking to buy this amount of house, do the nut math and figure out how you can actually service this person and what that value looks like. Don't do that. Don't fall into that trap. What you should be doing is delivering the exact same value, the exact same service that you would give to a multi-million-dollar buyer or seller. The same service. That way, all people can understand who you are and what value you give them. You never know the other person on the other side. So in summary of this article, referrals aren't triggered by a sales pitch, but they are triggered by the confidence that you won't embarrass the person recommending you, right? So if that person that you're representing, you did it well and you held their hand and you delivered an excellent service, they will have confidence that you're going to take care of anybody else that they refer you. And remember that referrals is a long-term game. It's not this instant thing. You don't just get a big pool of referrals. You got to understand it takes time to build that referral base up. Those true loyal fans, right? It takes time, but it takes consistency of delivering a service and a value to them so they want to do that. So here's what I would say. I would go back and I would audit what I would call maybe your silent sphere, those you haven't spoken to in probably like 6 months. Begin to engage with them, talk to them, figure out a way to make a call or a video, send it to them, some way to build a relationship with them. There are people inside of your database right now that want to recommend you or maybe would recommend you, but are not thinking about that you can rekindle that relationship with, right? So I challenge you, go out and send, 5 personalized texts, calls, videos, whatever it is. No sales pitch, none of that. But figure out a way to make a touch with that person to actually bring value to them and help establish that relationship. Now, it doesn't mean you go through your database and just call everybody. What I'm more saying is you call people that you truly had a good experience with, that you feel like you delivered a good service and it all turned out well, and you talk and you cultivate that relationship, because that becomes your true fan base, right? That is your referral base. And then I would also challenge you is to create what I would probably, kind of title professional standards. Like what is it that I deliver to every client that I represent? Take some time and go through this and say, look, if I was to have a buyer, here is the experience and the value I want to provide them as they work with me. This is what I want to do. And then this is what I want to do with sellers and investors and builders and all, create these standards of practice that you say you deliver to all clients, and then execute that. Do that with every single person you come in contact with, regardless of anything that they're buying. Don't worry about it. And then I would also go in and talk to like local business owners that are on your social feed and talk to them about things that you can do to incorporate them into your recommendations. Kind of build a network of professionals that you can refer back. Contractors, inspectors, those type of things, and have a relationship with them. Because you just never know if they might refer. You don't know if your lender, your banks, or your business owners in your community would also refer business to you because you have a relationship with them. They interact with a lot of people. So figure out a way to get in front of them as well. So that's what I would tell you to do. All right. So I would start cultivating relationships more than I would this sales pitch stuff. Right. All right. So hopefully if you found that helpful, check out the link. I'll put that in the description below. Now let's move on to story number 2. Story number 2 is kind of all about AI. I am leaning into researching AI, and I think everybody is currently doing that. But in this article, this is by Realtor.com, and really it's AI in real estate. What agents need to know in 2026, right? So, look, there is a ton of hype all around AI. All right, and there is a shift beginning to happen because when it first started coming out, a lot of what people are saying is, will it replace me? Like they, in almost every industry, even our industry, it was coming out like, hey, will AI replace what we do? Now, what's actually beginning to happen is now that it's come out and you see it's kind of integrated itself almost in every single platform and every single tool and technology and all that kind of stuff. The real question is now being asked, the one that's really going to utilize this new technology correctly, is how do I use it to actually save time? How do I use it to leverage the everyday logistical aspects of my business? Well, this article kind of begins to kind of break down in 2026 landscape where AI is kind of heading, that it's not really a luxury tool anymore that the best of the best use. It has now become more of a standard operating requirement. It's not as much new anymore, right? It's really a business-minded agent is going to figure out a way to incorporate AI into the logistical type systems. It doesn't replace you though, right? AI is not going to replace that human element, that relationship stuff that we've been talking about. It's not going to do that. It's not going to take over you. It can't replace you. It can do some predictive analytics. AI is now being used to identify, like likely to sell candidates in certain areas. There are certain programs that are doing that based on like life events and consumer behavior and data. It can do those type of things. It can get you in front of, or it can help you with like your workflow integrations, like, from just doing simple prompts to being integrated more and more into your CRM that is now causing, helping you to do more automation that manages kind of the boring parts of lead follow-up. Now, I will say again, I'd go back into my CRM and tweak that and make sure that what you're posting there is relational and it sounds like you. But it can help automate a lot of those things and learn from how you use that. So let's just go ahead and jump into this article and kind of break this down as I just talk on nonstop. All right. It says artificial intelligence has become increasingly integrated into the tools agents already use, often behind the scenes. Many CRMs, email platforms, marketing tools, and transaction systems now include AI features designed to automate small tasks or surface helpful insights more quickly. For many agents, this shift creates a mix of curiosity, excitement, and healthy skepticism. It's important to view AI as one part of a broader tech toolkit, not a standalone solution. These tools can streamline administrative work, improve productivity, and reduce time spent on routine writing or research. But AI doesn't replace the local knowledge, negotiation skills, and client-centric approach that define a successful real estate professional. Instead, it enhances the systems agents already rely on, allowing them to focus more of their time on the high-value relationships-driven parts of the job. All right, so pause for just a second. So let's think through this. Like I was saying, the logistical side of real estate is where AI is going to be able to integrate very, very well. Okay, it's going to help with a lot of the automations. But here's the thing. You need to kind of take an audit of your time. You need to take a time to figure out over 2025, if you've been in real estate for a while, maybe go the past 3 years and figure out of what things that you do in your job that generate business. What are the things that truly bring in clients to help you sell more properties. What are those action items, right? What is the lead sources that brought in the most clients? That is not where AI comes in and tries to replace, right? That is where you lean into. That's the stuff that you do as a real estate agent to keep building the business. What you're going to do with AI is begin to streamline the back end of all of those lead sources. So if you need a reminder set up for automation for, reminding the people of who you are and what you do and marketing and those type of things, that's great, right? If you need something that helps the workflow of calendar to syncing with your CRM and all these different types of systems that you have, that's where AI will help. But it doesn't need to replace you picking up the phone, making a call, creating videos, reaching out, going out on lunch dates and coffee breaks, right? That's the part where it's going to generate true business for you, serving your community. All those things is where you're going to grow your company. So you need to know what those things are. That's not the things you replace with AI. You replace AI with all this crazy logistical stuff. So let's get into what he's talking about. 3 helpful ways real estate agents can use AI. Streamlining writing and administrative tasks. All right. AI can generate first drafts for listing descriptions, client emails, follow-up messages, social captions, and text responses. These drafts give agents a starting point and reduce the time spent staring at a blank page. Now, remember, what he just said there is very key. Let's point it out. First drafts. Then he goes on. That said, every message still needs a human review. Agents add the tone, accuracy, and hyperlocal details that ensure communication feels personal and trustworthy. I would use AI to generate emails and social media posts to help get my creative juices flowing, but I would not just copy and paste that into an email and send it. I wouldn't just copy and paste that into social media and send it. Do you notice that if you go onto Facebook right now, or even YouTube or any of these platforms, you will see that almost everything seems to be scripted and sounding the same? That's because it's lost the human element and people are just using AI to be their voice. That's not the way to use it. If you want to use it to generate templates and help you kind of frame your thoughts, you need to then go back in and do the second draft and add those things, that human element to this, right? Hyperlocal details, the tone, your tone, the way you would communicate to your clients, the accuracy, because it can get things wrong. You need to be diligent in looking through this, but you can use it to streamline the process. All right, how about this one? Speeding up research and information gathering. AI can summarize neighborhood features, market trends, school information, or buyer and seller FAQs in seconds. It can also help outline scripts or talking points for consultations. These summaries are helpful as early drafts, but agents should always verify local data, cross-check MLS information, and tailor insights to the specifics of their market. Now, there's a lot of AI tools coming out, and they're just being thrown at us constantly. I reviewed one the other day that was actually really good. It's by a friend of mine. He created this platform. He's done a really good job creating a very simple platform and integrating AI into it that gives you things like this. And it gives you the ability to kind of tweak these type of things and kind of make it your own. But it gives you a great framework on how to do some data. And it's integrated with MLSs and also like websites. So there's a lot of technology out here that's doing these type of things. And that's where I would say AI is really helpful. Like if I go on and I have an AI that's tied to an MLS database, and I can ask it questions, hey, come up with, scenarios to help me target, this zip code with these type of homes and this average selling price. Well, it's going to know the data that it has from the MLS to make those kind of calculations, therefore tailoring it more specifically to my industry. So there's a lot of technology out here. You can do some searching on that. I'll probably cover that later in some other videos, but there's a lot out there to do these very things. That is a great way to use AI. All right, here's another one. Enhancing client communication and responsiveness. AI can prepare templates for common questions or routine updates during a transaction. Some platforms even offer chatbot-style tools to handle basic inquiries. Those chatbots on websites, look, they're handy. They can be you can tell you're talking to an AI bot, but still they can be tailored and tweaked to sound like you. So that's getting better and better every day. So just keep that in mind. Be proactive in looking at this. Is there ways you can use this to enhance your client communication without replacing you? Now, he goes on to talk about 3 limitations of AI for real estate professionals. He says, 1, information may be inaccurate or lack local context. We all know that's true, right? AI occasionally produces outdated, generalized, or incorrect details, especially when summarizing market trends or neighborhood insights. Here's the thing. If you just go in there and copy and paste things, it's going to lose all relevancy. It doesn't sound like you, and it can get things wrong. So you are the agent. You need to be diligent in giving your final opinion about what is being put out there because it's your name attached to that. So be very, very careful of that. Number two, messaging can feel generic without editing and customization. While AI is helpful for generating drafts, it doesn't always capture an agent's voice, tone, or communication style. If sent as is, these messages can sound flat or impersonal, right? Same thing. Edit, make it sound like you. AI cannot replace real estate expertise or emotional intelligence. Buying or selling a home is emotional and complex. Pricing strategy, negotiation decisions, and client conversations require intuition, experience, and empathy. All areas where human expertise is essential. This is the big one. We can fall into the trap where we hide behind technology and we forget to engage with clients. AI and technology will never be able to replace what we just talked about. It cannot replace intuition, experience, empathy, and the emotional connection that you get from active communication with the person. Even just picking up your phone and just texting all the time loses all of those things. So there is a craving in especially the younger generation after me that is craving interaction. And the interesting thing about that generation, you need to get in your mind, is they are very inquisitive. They actually lack some intellect in regards to how to go about buying a house because they are so inundated with so much information. They don't know how to navigate all that information being thrown at them. They can develop preconceived ideas about how this process really looks. An agent that understands that and does really good buyer consultations, contrary to what people say, these people don't want to be called and they don't want to be met. They want to just be communicated through text and Discord and all these type of things. I'm sorry, that's not true. They are looking for a good, strong advisor. They need help. So the person that takes the time to do that, they would be all in for that. All right. So lean into that. AI can't replace that. You need to focus in on that. All right, so here's some best practices for using AI tools in your real estate business. Start with repetitive, easy to automate tasks. Begin with areas where AI can make a quick impact, such as listing copy, follow-up messages, or social captions. Starting small helps you learn how the tools behave and where they need refinement. Good advice. Create prompts and templates that reflect your voice. Saving your best prompts and turning them into reusable templates helps ensure consistency across your messaging. So the thing is, like, AI is getting better and better at learning the way you communicate. Like if you use the same like ChatGPT or Gemini or anything, they're having this learning algorithm in the background, slightly creepy, but they are learning the way you communicate with them. And they are beginning to adapt more and more to the way you're looking for materials. So like every time you put a prompt in and it generates some information and then you follow it up with something like, hey, can you tweak this to sound more like this, right? And then it spits out another thing. Know that it's actually remembering kind of your preferences in the back end. So it begins to get better and better the more you kind of tweak it. So sometimes using AI and generating that and then correcting it and constantly trying to refine it helps you to build better prompts. But what the advice here is once you get that ironed out, copy and paste that or copy that prompt, save it in a Word document somewhere, and tweak it over time. But use that same prompt for a lot of your everyday tasks where you're doing a lot of the same kind of communications to streamline that. All right. AI can speed up the early stages of writing or research, but your local knowledge, market context, and fact checking are what make the final version accurate and trustworthy. Treat AI as a starting point, not the finished product. Yep. All right, so let me just end with some actionable items here in regards to AI. AI is being used in very many ways. All right, so let me give you some takeaways here. What I would say is I would begin leaning into implementing some kind of AI-driven lead nurturing sequence in your CRM. Like I would, if your CRM does not already have AI integrated, I would go into an AI platform and begin having it spit out a bunch of drip campaigns and those type of things. Begin to tweak them and work through those and make them sound like you, and then upload them into as a drip campaign for a lot of your everyday tasks that you do, right? Like going back to what I said earlier, the standards of practice, like this is what I'm going to do for all of my clients. This is where that AI can really help you do that. You can use it to create drip campaigns that sound like you, to automate a lot of the flow. Like use it as an example of like, what's my standard of practice when a buyer gets under contract? Part of that standard will be the constant communication. There's certain phases that take place in buyer to close, right? Those can be automated to help guide the buyer along the journey. So those are the way you want to think about that. So I would use AI to generate some drip campaigns, tweak them to sound like you, upload them to your CRM, and begin that sequence. I would also look into researching like AI that analyzes local MLS data, because they can help you find like under the radar trends that you might miss. And there's a ton of AI programs out there that do have a tie into MLS data, or even Zillow and data mine and that kind of stuff. Do some research and find those, because I think there's some benefits there. Now, I wouldn't be surprised if in the near future, and I mean very near future, almost all of our MLSs are going to have AI integrated to some degree, and it's going to be integrated where a lot of this can kind of happen for us. But we'll see. That's my speculation. I would also audit. I would go back and like audit your tech stack. Like go and look through like all of your tech that you are using, and look for any what I'm going to call like zombie apps. And I mean zombie is like if you open up your phone right now and you scroll through all your apps, zombie apps are like dead, right? They're alive, they're on your phone using space, and they cause more confusion. But if you've not used them in the past few months, they're zombies, man. Get rid of them, delete them. You don't need them. Now, don't just throw them out though. You might have downloaded them knowing that you might have needed to implement that. So what I would do is audit it. Now, audit is not meaning I'm just going to delete everything. It's I'm going to go and look at my tech stack. I'm going to look at this, and I'm going to throw out the stuff I don't need, but I'm going to look at what I have and analyze if it's something I still need to use or I need to implement. Does it solve some of these problems that we're talking about, right? So that would be another action item. So I would go do that. So figure out, an AI tool that you want to use, Gemini, ChatGPT, stick with one and help it learn how you use it. And then you can branch out from there and use different ones because they all do different things, right? All right. So just to kind of summarize this again, in 2026, AI is not going to take your job, but an agent using AI probably will. Okay. So they will probably, if an agent is using AI, they're going to probably be more efficient in their communication. So AI is not going to replace you, but an agent that is using it probably will. All right. So if you found that helpful, hopefully you did. Check out the link in the description for more. And then also, we're almost through with this live show. Consider subscribing, liking, and following. I do appreciate that. And I'm wanting to build that community of tight real estate agents that are finding value here. So I appreciate that if you decide to do so. Thank you. Don't take it lightly. All right. So one last article before we kind of get into like the big topic with Trump's announcement about large institutions and that kind of stuff. This one is just a quick skim overview reminder. The IRS is urging early prep for 2026 tax rules to shift, right? So, and this article actually came from the Florida Realtors Association. Let me share my screen. And IRS urges early prep as 2026 tax rules shift. There are some changes to the tax code. Now, I said this at the beginning of the show. I'm going to say it again. I am not a tax advisor. I'm not giving any tax advice here whatsoever. I want you guys to go and talk to your accountant, your CPA about things that have begun to take place. So the point of going over this article is to spur you on to have intentional dialogue with your accountant and CPA, because we need to be able to do this. We can't take it for granted that our CPA and everything understands our industry fully. We are responsible for our company, right? We are the ones in charge, and we need to pay attention and have the active conversations with the professionals that we hire that aren't specialties in our industry, right? So this isn't us trying to go to our CPAs and accountants tell them what to do. It's us having dialogue with them and seeing if anything mentioned in this article is relevant to me, to you, right? So that's the conversation. Look, tax season, it is absolutely looming, and it's really close. And IRS is signaling this major shift, right? There's a lot of regulations that have changed that could ultimately affect independent contractors as well as real estate investors. So we're going to get into this. Right? There's no reason to be scared of these type of things, but preparation is the ultimate competitive advantage, right? So let's get into this. And what we're going to see here is there's a little bit of a stricter reporting happening a little bit, and more specifically on the way we receive money, and think more of like digital ways, right? Like Venmo and Zelle and things like that. So if you're doing any kind of side hustling, you're not hiding that money, guys. You're not hiding that money. All right. So Internal Revenue Service advises taxpayers to prepare now for filing changes. including direct deposit refunds, updated tax laws, and new child savings accounts. The Internal Revenue Service is urging the public to take action now and start preparing for the 2026 tax filing season as new policy shifts, filing options, and other major changes go into effect. Tax planning is for everyone, the IRS noted. Planning ahead can help you file an accurate return and avoid delays that can slow your tax refund. If you get a refund. For many Americans, tax season feels like a once-a-year headache. But the IRS is stressing that this year is worth preparing for early. All right, set up direct deposit. So this is the first note that they make right here. The IRS is phasing out paper tax refund checks, meaning if you're formerly relied on paper checks to receive your refund, that's no longer an option. All right, so be proactive here. Realize what they're saying is if you've been getting a check, that's no longer an option anymore. So first thing, you need to set up direct deposit, okay? Review 2025 tax law changes. Recent legislation includes several new tax deductions and credits that may reduce your tax bill or increase your refund. We don't want to miss those things, especially if you're like me and you have to pay every single year. All right, the IRS is encouraging the public to review tax provisions to be prepared for any changes that might affect them. The domestic policy mega bill President Donald Trump signed into law last year has reshaped parts of the tax code in ways that will matter on your 2025 return. From deductions to credits, these changes can affect how much you owe or the size of your refund, but they only help if you understand them. So have conversations. This is the part where you go to your CPA or accountant and have conversations about the tax law changes and ask them specifically, how does that relate to me and the way I'm structured and the way I do things, right? I would go have that conversation right now. If you're incorporated or you have a company or a business, remember March 15th is that filing deadline. If you're a sole proprietor or individual, it's April 15th. You don't want to have to file an extension because you'll pay the penalties and that kind of stuff. So be proactive. Start having those conversations right now. All right. Understanding new digital assets reporting requirements. So here's the thing. If you bought, sold, or received cryptocurrency, NFTs, or other digital assets, these aren't just online hobbies, they're taxable. The IRS requires those transactions to be reported on your return, even if you don't receive paperwork from a broker. Income from payment apps and online marketplaces is taxable. And you might receive a Form 1099-K if your activity meets certain thresholds. Regardless if you receive that 1099-K though, guys, regardless if you receive that 1099-K, that is income. So Facebook Marketplace, if you get money through Venmo and Zelle and all these other places, that's taxable income, right? You did sell a product, but you need to take that money. You need to take all that to your CPA and ask them these questions. Is this taxable? Am I going to be liable for this? Even if they don't send you that 1099-K, right? Even if you don't get that. The bottom line, digital income still counts, and reporting it correctly now can prevent IRS headaches later. Okay, Trump accounts, what to know. A lesser known but potentially impactful change outlined on the IRS notice involves Trump accounts. This is not Donald Trump. A new type of retirement savings vehicle for children with valid Social Security numbers. These accounts can receive a one-time government contribution of $1,000 for eligible kids born between January 1st, 2025 and December 31st, 2028. Parents and guardians may want to learn more about these options sooner rather than later. Now, it's a Trump bill, but it's not about Trump. It's just something he passed, and the benefit is there, right? So maybe if you had a kid between those dates, January 1st, 2025 and December 31st of 2028, if you have a kid, there's a one-time government contribution for that kid, for eligible kids, right? So make note of that. And then get familiar with your IRS online account. The IRS advises filers to familiarize themselves with their IRS individual online accounts. Available 24/7, these accounts let you check your tax records, make payments, manage communication preferences, and protect sensitive information, all before tax season chaos hits. Having this account ready now can reduce last-minute stress and help you spot potential issues early. So this is just good reminders for you guys to be proactive in your tax filing, right? So what would I advise you to do? What are some actionable takeaways from this? Well, like I keep emphasizing, I would call your CPA and your financial planner and your accountant and talk to them about your financial health. your taxes. What does it look like? What can you be doing to prepare for the tax season deadlines that are looming, right? And then what can you do in 2026 to prepare for 2027 taxes? These are conversations you need to be having. You need to be proactive. And then I would also, you need to figure out a way to download a software or some kind of accounting software that can take all of your receipts and digitize them from the last 12 months. If you have shoe boxes and all this kind of stuff, look, get away from that. Your CPA does not want your shoe boxes of receipts. You need to figure out a system that scans that kind of stuff in. Now, I actually have been using a company for many years now. Matter of fact, a few years ago, I had the CEO on this show and we talked about it. It's Hurdlr, Hurdlr, Hurdlr.com. And it's tailored more specifically for real estate agents. It has mileage tracking inside of there. You can scan receipts. It's not that expensive. It's like a one-time year fee to get all their benefits. It's really reasonable. But it is tailored. It has like ways to track certain properties. It is accounting built for real estate agents. It's not overcomplicated. It doesn't take a lot of time to set up. It can sync with your bank account. So I advise you, research that, check it out, Hurdlr.com. And you can go back to some of my previous videos and look for that. I interviewed the CEO and kind of saw what his mission was behind this. And it was a good conversation I had with him. It was really, really insightful. I would then, in the same conversation with your accountant, CPA, and those type of people, I would talk to them about how you file your taxes. Ask them about S Corp versus LLC versus sole proprietor. Have the conversation because, again, get them thinking and giving you advice because there's different tax structures for different people that might make more sense. Again, I'm not recommending one way or the other. That's up to them, the CPA, and you guys to decide what's best for you. Everybody's situation is completely different. But I encourage you to go have that conversations. The final thing I would say is if you are an individual contractor that is taxed and you're not paying into taxes, chances are you're going to owe money every single year. So what I would do is I would get in a habit of transferring money over into what I would call like a tax savings account, right? And I would just automate, if you have a bank account or find one that can automate every time I make a deposit, a percentage goes over into this holding account, right? If you can find a bank that does that, that will help you budget for this time of year when you start having to pay taxes. And then talk to your CPA as well about what that percentage should be. It might even be worth you having that conversation about paying quarterly taxes to avoid having a big lump sum at the end of the year and paying into that off of that tax savings account. So that's just money management. I think that's a great, great way to prepare yourself so you're not stressed out this time of year. All right, so there you go. Reach out to your favorite CPA, ask for some tax tips and some structuring ideas, and then go from there. All right, very good. All right, now we're going to get into the headline. Now, I actually did an entire video of this last night. You can go to my channel now and you can watch that video. And it's basically just titled "The Large Institutional Buyer Ban That Trump Announced." Right? I labeled it something like that. It's got a big thumbnail. It says, "Is this banned?" And it says Trump and all that kind of stuff. So you'll see it. And I broke it kind of all down, but I didn't want to go through this entire live show and not talk about it because it's worth talking about. Now, I want to set this up. It's a proposed ban, right? He proposed this. This is not law. But what did he propose? Well, let me bring this up, and I'm going to share with you the actual post that he made and the statement that he made in regards to this, right? All right, so here's an image of what he posted. He said, "For a very long time, buying and owning a home was considered the pinnacle of the American dream. It was a reward for working hard and doing the right thing. But now, because of the record high inflation caused by Joe Biden and the Democrats in Congress, that American dream is increasingly out of reach for far too many people, especially younger Americans. It is for that reason, and much more, that I am immediately taking steps to ban large institutional investors from buying more single-family homes, and I will be calling on Congress to codify it. People live in homes, not corporations." Now, a lot to unpack there. Now, let me just briefly say this. This is not a political conversation. Now, obviously, there's a statement about Joe Biden and Democrats in Congress and that kind of stuff. And look, this is just politics of America, right? Everybody's going to leverage one way or the other. This is bipartisan in many, many ways. Matter of fact, this is one of the things that found agreements almost across the aisle. both parties kind of see a benefit to doing this. And there's a lot of information on why that's the case. And I'll get into that just in here in a second. But before I do, let's just kind of look and see what the news, kind of across the tab. You've heard me talk about this before. Read across the tabs. What is multiple news organizations saying about this very thing? And then I'll give you my opinion on this. And you, like I said, you can go back and watch my video. I will link that as a card up here in this corner after this live stream. But anyway, let's look through just a few little articles. This is Yahoo Finance. They posted this, and it says Trump proposes ban on institutional home buying, sending real estate stocks down. All right. So it says this, investing.com shares a major, pop-ups drive me nuts, shares of major institutional landlords and asset managers tumbled Wednesday after President Donald Trump announced plans to immediately ban large corporations from purchasing single-family homes. The move aimed at restoring the American dream of home ownership for individuals sent shockwaves through a real estate sector that has become increasingly dominated by Wall Street capital. Now, let me just say this. There's a little bit of fear-mongering going on here as well. Now, it says sent shockwaves through a real estate sector that has become increasingly dominated by Wall Street capital. So it's picking up steam. Yes, there is big movements in this type of industry that these big Wall Street institutionals like Blackstone are moving to buy up more and more, residential properties and typically large swaths of neighborhoods. Sometimes they'll buy 5 or 6 homes in a neighborhood or even more. And that ultimately has a major effect on local market. But we got to put this a little bit in perspective and understand that that's still a very small percentage of sales across the nation. We're still looking at like not even 2%, maybe 3% in some areas, but it fluctuates depending on where you're at. But by not addressing this is ignoring something that could gain huge momentum that could have long-lasting consequences. So that's where I want to lean into. So I get the article, mentioning that. That's fine. Typical news, right? The president's Truth Social post triggered an immediate sell-off across firms with heavy exposure to the single-family rental market. Invitation Homes, Inc., the nation's largest owner of single-family rentals, saw its shares slide 6.1%. American Homes for Rent followed closely, dropping 6.3%. Financial giants that have pioneered the financialization of housing were also hit hard. Blackstone Inc., which founded Invitation Homes and recently re-entered the space with a $10 billion acquisition of Air Communities, fell 5.1%. BlackRock Inc. and JP Morgan Chase & Co., both frequently targeted by populist rhetoric regarding their influence on the housing market, declined 2.6% and 2.2% respectively. It says people live in homes, not corporations. Now, here's the thing. This is my experience. I mentioned this in my other video, is typically investors, they sell first, ask a bunch of questions later. They respond to the emotional surge just in case. Their ultimate goal is to protect their investment. And when rhetoric like this is mentioned, now, when I say rhetoric, it's only because I'm saying that in regards that nothing's happened yet, right? It was a single social media post that has triggered this whole entire thing. So with that being said, the emotion entered into the market. They responded, sell first, and we'll ask questions later, right? Protect my money, and we'll see what happens. Okay, so that's why there was a major dip over this social media post. But this is also why words have so much power, and we have to be highly, highly aware of our power of our words and what they do. Same with the news out there. Listen, guys, be careful with what you say. It has major effects on people. All right, so that was Yahoo Finance and their take. Let's go on to USA Today, and we'll get kind of a perception on them. And then I will end with some of my observations and kind of the risk of these institutions, these large institutions coming in, buying up residential homes. I'll elaborate again on this video, on this last show about that. But here's USA Today. It says President Donald Trump said he would ban Wall Street investors from buying single-family homes in an effort to ease the affordability crisis that's plaguing the housing market. Again, see, this is that plaguing housing market. It's making it sound way worse than it is. To be honest, in our market, we haven't even been affected by this. There's a lot of markets that have not been affected by this, but it could grow. So I agree that we've got to be diligent and be listening and being paying attention. I'm not going to buy into the hype that it's plaguing the housing market by any means. It says, and we're going to skip what he said. Yeah, institutional investors such as Blackstone have been reliably buying and renting out single-family homes since the 2008 financial crisis, locked many Americans out of the mortgage market. Many housing experts are skeptical that banning institutional home buying would make a sizable difference in the housing market overall. But Wall Street investors can be popular scapegoats. As previously reported by USA Today, limiting their participation in the market was a rare point of agreement between both candidates during the 2024 presidential election. That was my point earlier, right? I understand that there are some people that are skeptical about this banning actually doing anything, because really we're talking about a very small percentage of people that are affected by this. But the momentum is gaining, right? That's the problem. It's not that we have this huge major problem, but kudos to these organizations, even both presidential candidates, being aware of these type of things going on, right? Because this is a movement that could cause major effect. All right, Sharon Cornelison, Director of Housing at the Nonpartisan Consumer Federation of America, also notes that big investors have an uneven impact in local areas around the country. While compromising a small fraction of home buyers nationwide, institutional investors have turned some neighborhoods, think suburban Atlanta, into mortgage deserts and limited home ownership opportunities, she said by email. It's long overdue to limit private equity's incursion into housing. Let me know in the comments or later on in the comments if you've experienced this kind of thing in your market. I'd be curious to engage with conversation with somebody that's actually having this experience. That'd be awesome. So in an email sent to USA Today, a Blackstone spokesperson said the company's ownership of U.S. single-family homes represents about 2% of its real estate assets under management and 0.5% of the overall firm. They do a bunch of other investments, right? They're not just in real estate. So they're making a statement that it only represents 2%. The company has also been a net seller of homes over the last decade. So these are comments coming directly from Blackstone, right? This is coming directly from them. This is their spokesperson, and these are their numbers. I don't know. Like, is this true? Is this not true? Are they actually selling properties or are they holding properties? I don't know. But I will say this, when news like this breaks, there's going to be some investigative reporting going on, and the truth's going to come out a little bit. So let's listen and pay attention and use our brains. Implementing such a ban will likely prove challenging, if not outright impossible. Under the Biden administration, the Department of Housing and Urban Development implemented many policies to encourage owner occupants in the market who held roles at the Federal Housing Administration during that time. Among the most important were first look requirements that established and lengthened the period during which owner occupants, public entities, and nonprofits had a chance to buy distressed properties and mortgages before they were available for investor purchase. In the past year, HUD has rolled back many of those protections, said Elderman, who is now an executive vice president at the nonprofit National Community Stabilization Trust. So in my entire career, when it came to like HUD homes, and agents listening, you know what I'm talking about. When it came to HUD homes, there was always this period of time when the home that was being sold, and if we go back to like when the market crashed and the recession happened, when these foreclosures were coming on the market, HUD was very proactive in giving the massive amount of time for the first process of bids to be given to owner occupants, to the point where they even had to sign documents to say that they were going to live in the property. And if they weren't, they were committing fraud. So that was the movement of HUD. Now, there's been a few rollbacks of that kind of stuff. Now, what we're going to see is this kind of coming back, right? That's this shift kind of happening. But that was kind of the industry standard with HUD homes, is like it was owner occupant first. Their whole goal there with foreclosures and HUD homes was to put owner occupants in the home. To be honest, that is a very healthy thing for the market, which is exactly what this ban that Trump is proposing is trying to help curb, right? That's the whole point. All right. First-time home buyers are suffering as housing has remained scarce and increasingly expensive. They made up a record low share of all buyers in the most recent year, and the average age of a first-time buyer jumped to 40 according to industry analysis. Okay, so there's that article. One final article on this. This is Fox Business, and we'll give a review on this, and I'll give you kind of my observations. Here we go again. Pop-ups everywhere. Trump announces plans to ban institutional investors from buying single-family homes. This is all. I appreciate the articles. They're just very simple. Trump looks to ban large financial institutions. Let's just get into the numbers. Trump wrote in the Post on his Truth for a very long time, buying and owning a home was considered the pinnacle of the American dream. We're going to skip that. Let's get into the Fox Business's opinion. The president added this. Large financial institutions like Blackstone have purchased thousands of single-family homes since the 2008 financial crisis spurred a wave of home foreclosures. Firms are increasingly investing in rental homes, which have outperformed other commercial property sectors like offices and retail in recent years, amid rising borrowing costs and shifts in work patterns. Housing advocates and lawmakers, including Democrats, have criticized institutional landlords as having constrained the housing supply and increased rental costs for Americans. See, this is bipartisan. This has nothing to do with politics. It has everything to do about the American people and the rental market and the housing industry. It doesn't matter that Donald Trump said it. All parties have been in agreement that something needs to be done here, right? So this is not coming out of left field somewhere. This has been talked about for a long time. All right. It's unclear what legal authorities the president will cite in his push to ban institutional firms from buying homes, or what additional measures he's pushing for Congress to take. We don't have clarity on any of this just yet. We don't know what this means. What does large institution mean? What is the definition of that legally? We don't know. The president's announcement caused shares in home builders to plunge. We talked about that. We talked about the different homes. So they're just agreeing. It's a lot of the same kind of article. There you go. So there's multiple news sources from 3 different sources. And look, they're all saying the same kind of thing. I like it when it's a bipartisan issue. People are just looking at the facts, assessing what's actually going on here. Now, what is the risk here, right? What is really going on? Why are we even talking about this? How do we correlate this into how this actually affects the real estate market? Now, I keep referencing, I had a video posted last night. Go check it out. I went into more detail than I did even here. Now, I've elaborated on the news cycle a little bit more. But let me just summarize real quick, and we're going to wrap this show up. I'm getting late to an appointment. So here it is. So what we need to be aware of is when these big institutions come into a market, they tend to change the flooring price, right? What the normal market would have been, which is set by what local families can afford to buy based on their salaries. When these large institutions enter in, they bring all cash buying power. They can close faster. They can skip inspections. They often win most of the bidding wars, even if their offer price is the same as a family making the offer, right? They look way better on paper. So why would a seller sell to them? So this changes that floor. So what the home prices would adjust to when the correction needed to happen, it changes because these families aren't buying these homes. The institution keeps the price high, preventing the market correction that we need. All right. So that's one of the problems. There's also another one, and this one is the inventory depletion scenario. So residential real estate usually cycles around, right? A starter home is bought, it's lived in 5 to 7 years or so, and then it's sold to the next family. So when a corporation buys a home like these, it is often removed from the for the sale market. Now, they made a statement that they put it back on the market and they sell a lot of properties. Well, I'm going to push back a little bit. They are removed off the property, off the market for a lot longer, and if not permanently, because they can leverage those assets. They don't really care so much. They push it to the maximum. So what does that mean? Well, the neighborhood loses its starter home ladder, right? That ladder that transitions and those neighborhoods are growing and people moving and ebbing and flowing to then being static. This forces those young families who are wanting to buy those homes to remain more as renters or looking to live in that local area. And then, to be honest, most of the time, they become tenants of the very home that they're wanting to purchase. So even though this makes up a very small percentage, and they made their statement, right? It's only 1.5 to 2% of the whole entire market. Yeah, but it's gaining momentum, right? It's gaining movement. And so if this becomes a viable option for investors to dump money into big hedge fund companies like Blackstone, that's a problem. This is a problem. Then what also ends up happening is there is a sophistication to what rent does. And there's an inflation algorithm here. So remember, most of your mom and pop like landlords who might keep the rent same for like a really good tenant because they have a relationship with that, just to avoid the hassle of finding someone new, institutions like this, they don't care. They don't have a relationship with that tenant whatsoever. When it comes to what the rent is, they're going to use an automated algorithm to price that rent, right? These systems are designed to push that rent to the absolute maximum market rate every single year. It has nothing to do with the person and the relationship that they have with the person on the other side that's renting the home. When one large firm raises rent, then guess what also happens to the local landlords, right? They see a market rate increase, and they raise theirs too. And that causes a ripple effect across the entire industry, which causes more higher living costs across that entire zip code that institution moved into, right? Now, there's another problem here too. There's a lot of documentation out there where the cared for properties of ownership, when it's the residents that live there that own the property, want to take care of it. When it's a big company, typically they come in and do a bunch of updates, but then negligence comes in. Lawns get overgrown, certain maintenance things get neglected, right? Because now we're relying on a corporation to make these calls. So study data does show that these institutional landlords, they are significantly more likely to file for evictions and often have higher rates of code violations compared to local owners. All right? Because look, this owner is in a different state most of the times. They may be less responsive to what the local issues are, like lawn maintenance and all these minor repairs. This can lead to that gradual decline in pride of ownership that a homeowner that lives in that home actually has in that neighborhood too, which can actually hurt the property values of the remaining homeowners nearby. So these are very significant scenarios that cause a lot of problems. And this is not just a news headline and Donald Trump trying to do something. This is a conversation that's been going on for a very long time. And it's been in the back burner because people kind of throw it off and like, well, it's just such a small amount of percentage of the market. Yeah, but that's growing. That is increasing. So we need to be paying attention and we need to be talking through these type of things. We need to have this conversation here. All right. So that's all I've got for today. I appreciate it. Thank you guys, as always, for being here. That is your real estate brief for today. If you found this helpful, please consider hitting the like button to tell YouTube you would like more of this type of content. Also, consider subscribing to join a community of real estate agents that are focused on building a business that is relationship focused first. So remember, we're only here for a short amount of time. So let's be relational. Let's build connections. Be wise with the little bit of breath that we're given. And you know what? There's always a whole lot more I could be said, but that's all for today. See you later.